Sorry, there was a light cut. So I'll where I was at Government Securities Acquisition Program. See, RBI is just a second. Let me reconfirm it. Okay. Okay. See, RBI is not permitted to purchase or sell government securities under primary market whenever they are doing it under OMO, open market operation, because they are doing it on behalf of government. They are not allowed to purchase in primary market itself. Okay, so they used to purchase in secondary market. This is under the GSEC acquisition program, GSAP. Okay, so and why it is not being permitted? Because in public finance, I'll be discussing about monetization of deficit. So RBI does this generally through printing money. They are printing more money and they issue government bonds, and they used to purchase those government bonds from primary market itself. So there was a huge liquidity in the market, huge money supply. Because of that, under FRBM Act, this was banned. Like RBI was banned from doing this because this was not good for Indian economy or per se any economy. I'll be discussing that perspective in detail in public finance chapter. But for now, you need to understand this fact that RBI is not allowed under primary market. So GSEC acquisition program is a mechanism employed by RBI to purchase government securities from secondary market according to predetermined schedule. Okay, so what is GSAP and why they used to do this? Suppose the government RBI is issuing some government securities, right? And if RBI is saying that okay, you purchase from RBI is saying to other people, stakeholders like banks or retail investors, other people, that purchase this from here. I'll purchase from you some proportion of it in secondary market. Okay, at this price. So if although government securities are safer option for investment, because when whatever they promise they used to pay back. Okay, unlike the other kind of investment which is based on demand and supply of market, so that is different thing. But for now they are safer option. But if RBI is saying that in secondary market I'll be purchasing this, I'll be getting more promising factor here, and I am getting assured return on those government bonds that RBI will purchase definitely. So at that moment, I will demand more those government securities in primary market. So RBI does this to ensure that people are buying enough government securities in primary market. Okay. So RBI periodically purchase government bonds from the market through OMOs. The GSAP is in a way an OMO, but there is an upfront commitment by the RBI to the market that it will purchase bonds worth of specific amount. The idea is give to comfort to the bond market. Okay, that is fine. Next is quantitative easing. Quantitative easing is the monetary policy tool used by any central bank, such as like RBI also, to expand the money supply. This involves purchasing financial assets, primarily government bonds, simply opposite of what RBI used to do during inflation. During inflation, they used to snatch liquidity. Okay, so what they are doing, they used to sell government securities. But in quantitative easing, it's just a phenomena where they are buying government securities and giving money to people. Okay, so they are increasing money supply in the economy. That is simple thing. Okay, purchasing financial assets, primarily government bonds from the market, creating new electronic money in the process. Similar that I was talking about monetization of deficit. That is quite different when government is borrowing by printing more money by RBI. But here RBI is printing more money to purchase these government bonds. Okay, so similar but quite different. So quantitative is easing means RBI is printing some electronic money or money, but they are doing this by printing new electronic money, and they are what they are doing, they are buying government securities and getting back some money into the economy. So what is the advantage? Simulating economic growth, lowering interest rate. Of course there is a high money supply, interest rate will go down, economic growth will be there because enough money with the people, money supply increase, demand increase, production increase, and all these things. So boost asset pride as well, address deflationary pressure. But shortcoming is also impact on investor spending. Inflationary pressure may goes up because people will be having more money and they will demand more, growing national debt as well. Okay, so quantitative easing was implemented during 2008 global financial crisis as a key measure to combat the ensuing recession. क्वांटिटेटिव ईजिंग नाम से ही पता चल रहा है दैट ईज कर रहे हैं चीजों को. सो एट दैट टाइम व्हाट दे विल डू, दे विल just increase money supply to combat recessionary phase. Okay, so mechanism address bank liquidity and inject liquidity. Goal is to stimulate economic activity. Impact is reviving credit flow, stabilizing financial market, and supporting economic recovery. Then we have discussed a lot about quantitative tools. Now I am going to discuss qualitative tools of RBI to control credit creation or credit distribution in the economy. Okay, to control money supply simply. So first is moral suasion. मोरल सुएशन नाम से पता चल रहा है दादाजी टाइप्स के लोग क्या करते हैं, ग्रैंडफादर लाइक फिगर, they used to persuade us that look beta, you can do this is good for you can do that, but you can't do this because if you do this will happen, so you should not do this. So they used to suggest us, they used to persuade us, but when we are not agreeing to them, then they will call our father and they will say ki your son or your daughter is not doing this, tell her to do that. In that case they are creating pressure. Then if again that person is not getting agreed, then they will take action, something like if you do this I leave house, something like that. So take action like the recognition. So that happens. Similarly, RBI used to do that. They used to persuade banks that you should invest here, you should invest there, you should control credit in this particular sector, something like that. But if you're not agree, then I will take action like prompt corrective action and other kind of things as well. Okay, simple thing. Then comes direct action. Direct action refers to enforcement measure undertaken by the RBI against bank and other financial institution that fails to adhere to its directives and regulation. Okay, direct action. That means RBI is saying that if you do not comply with my norms or my rules, then you have to pay back some penalty. You have to, I'll put some restriction on you. I'll put some mandate on you. Then you have to follow that. Okay, so direct action. How RBI used to do that? Under RBI, they are getting power through RBI Act, Banking Regulation Act, Payment and Settlement System Act, Prevention of Money Laundering Act. There are many mechanisms through which RBI can do this. And if it not only RBI, other like institution like under PMLA, ED can do that. So that may happen. Okay, example, stricter loan provision. Like this is the latest example in May 2024. This happened. Stricter loan provision for construction sector actually. So lender were required to set aside 5% of such loans as a provision of buffer, but it increased. Sorry, earlier in construction sector, lender has to put 0.4% as a some safety measure as a reserve, but right now it is increased multifold up to 5%. So this kind of things can be done. Okay, so that is direct action. Next is credit rationing. Credit rationing means setting a minimum and maximum limit in particular sector, that RBI is saying banks that you cannot give more than this much of loan to this particular sector, or you cannot like you should not give lesser than this much loan in this particular sector. So they are just deciding minimum and maximum limit in particular sector. It is a monetary policy tool employed by central bank to control the flow of credit within the economy. It involves deliberately limiting the availability of credit to specific sectors or entities. Okay, types of credit rationing. There can be multiple types. You do not need to go into detail. Example is limited loans to real estate, developers during the housing bubble to prevent excessive risk taking, and imposing credit ceilings on banks during period of high inflation to curb overall lending. Basically limiting, restricting bank to give loans to any particular sector. Okay, then comes priority sector lending, PSL. PSL means government has assigned some of important sectors where they are suggesting banks or mandating banks that you should give at least 40% of your total loans under PSL. That means of out of your total loan, 40% should be given to some dedicated sectors which comes under priority sector lending. Simple. Okay, and what are the sectors? There are list of sectors. You do not need to remember all those things, but you can just take a quick glance, like agriculture, education, MSMEs, or other sectors as well, dairy and farming and other things. You need to go through that list. don't try to memorize it, but just try to understand कि which kind of sectors can be there. क्योंकि लॉजिक से भी हो जाता है कि जो सेक्टर्स इंपॉर्टेंट होंगे इकोनॉमी के लिए वो इसमें आ जाएंगे, एंड विच नीड्स ग्रोथ, विच नीड्स सपोर्ट फ्रॉम बैंकिंग सिस्टम, तो वो आ जाएगा इसमें. ओके. Then comes loan to value ratio, simply collateral that RBI mandated that for this particular kind of loan, you need to keep this much of collateral. That means uh, banks and NBFC can't lend more than X% of collateral. That means if you want, if you other person is taking a giving a collateral of 100 rupees, then you can only give loan up to 80 rupees only. Okay. So loan to value ratio, this happen particularly in housing loan, कि अगर आप लेने जा रहे हो तो उस मोमेंट पे your house is putting as a collateral, but you are not getting the total amount of your worth of your house, just a specific amount of that. Okay. Then selective credit control. It is a monetary policy tool utilized by RBI to influence the allocation of credit within the economy. It involves imposing specific restriction or incentives on lending to particular sectors or for specific purposes. Simply selective method for credit control कि selectively करना है, कुछ sectors को दे ज़्यादा देना है, कुछ sectors को कम देना है. So some sectors are like getting prioritized, some sectors are getting discouraged to give loans. Simple. Okay. By name it suggests. Then restrictive measures, SEC can be used to discourage lending to sectors deemed too risky or detrimental to economic stability. Restrictive measures, supportive measures, simple as I just told. Then comes sterilization. Sterilization means uh, it is a monetary policy tool employed by central banks to offset the impact of foreign exchange market intervention on the domestic money supply. That means if RBI used to, under foreign exchange chapter, I'll be explaining that how RBI used to control money value in emergency kind of thing by buying and selling of forex reserve. Okay, so because of that, when our domestic economy and domestic money supply is getting hampered or getting affected in positive or negative sense, then RBI used to take measure to sterilize those things. So if because of foreign exchange market, if RBI has done some sort of activities there, and because of that there is a high inflation in the economy, high money supply in the economy, then RBI will squeeze those excess liquidity. So that is known as sterilization. Of course it is similar to whatever we have discussed till now, but why it is being called sterilization? Only because intent is to control and offset the impact of foreign exchange market intervention. That's why it is known as sterilization. Okay. So foreign exchange intervention and sterilization operation. Here the counteract this impact, central bank conduct offsetting operation in the domestic market. To offset an increase in money supply, the central bank sells government domestic asset like government bonds to absorb excess liquidity. Okay, to offset a decrease in money supply, central bank buy domestic asset to inject liquidity. Simple thing. Whatever we have discussed, same thing has been written here. You just need to know that what is sterilization when government, central bank tries to offset the impact of foreign exchange market intervention, then it is called sterilization. That's it. Nothing else. Okay, so there is a lot of things still left, but this is enough information to process in a single session. So I will stop it here because this is quite recap kind of chart. So I'll start from here in next session so that you will be able to quick recap all those things and then we will move forward. So thank you so much. And if you have any issue, you can directly contact me. Okay. Thank you. Have a nice day.